For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
All right, everybody, welcome back to another Saturday Sendout from the Simple Side. Today, I'm just going to jump into a couple of updates that I've made, some of the just portfolio news, and a little bit of the news that's happened over this past week. And then I'm going to jump off and let you guys get into the rest of it.
Welcome to the Simple Side. Market beating peaks inside. There's no jargon and no time to waste. Join the Simple Side and end up in first place.
All right, guys, like I said, today we're just going to run through a bit of the news that happened last week, some updates that we're making to the newsletter, and then I'm going to let you guys read the rest of today's newsletter. It's going to be a quick podcast for today. One thing that I do want to call out real quick is I want you to let me know your thoughts on the newsletter, on the format, on all the information that we're giving out. It makes this newsletter so much better for you guys. It lets me give you more value. So right after you look at the update section at the very top, there's a big button that's going to say, let me know your thoughts on the new format. I want you to click on that and fill out the survey just real quick. All it says is, what do you like about the newsletter? What do you dislike about the newsletter? And what are some things that you want to see changed? If you fill that out and let me know everything that you want updated, I will update it for you, and it will make the experience better for you guys. It'll make it better for me. And overall, we're just going to become a perfect circle of exactly what you guys want. It's going to be like a perfect yin yang. So go and do that. A couple of people filled this out a few weeks ago or this past week, and they said that there was a few things that they wanted to see changed. One of the things that somebody asked for was a trimmable and addable position section for all the portfolio. So they wanted to know what stocks are at the highest amount of returns that I see as trimmable, what stocks are at the lowest returns that I see are positions worth adding to. And so what I did is on the paid subscriber spreadsheet, which is a Google sheet that you get access to if you're a paying subscriber, you can jump on there and you can go see the trimmable positions and positions worth adding to. These are the top 3 performing stocks for the trimmable positions and the bottom 3 worst performing stocks for the positions worth adding to. Of course, if I see a stock that shows up on there that I do not think is worth adding to, I will quickly remove it from that list. But those are all great positions to go look at if you're looking at entering into the portfolio and you're a little bit late to the action. Or if you just feel like you want to take a couple of chips off the table here and there. So go take a peek at that. The other thing that somebody asked for was morning tea. And I'm assuming, I don't really know what morning tea is, but I'm assuming they want to see a daily morning market news letter come out from me. And there's a lot of people subscribed to this newsletter, over 260,000, I believe. And so I don't want to send out daily market news and crowd up everybody's inbox if they don't want to have it. So I started a new newsletter. It's actually been around for a while now, but it is called the Simple Side Daily. And so it's a different newsletter because I don't want to crowd people's inboxes, but you can go join that very easily. I've included a link in today's newsletter. It's the Simple Side Daily. Again, you can Google it if you want to. And every single morning, I send out a quick newsletter with a highlighted news story and then just some general stock news about everything that's been going on with specific companies. You can see I included a quick snippet of what that looks like. On here I'm talking about Adobe, who posted record Q3 revenue. I talk about Apple, who rolled out some FDA-cleared hypertension detection on their Apple Watch. Getting into the healthcare sector is interesting, but could be very valuable for them. And a couple other things on there as well. And every single day I give you 3 different companies and their current charts. So I think I show you their revenue, their price, and then their net income. And so you can see how their price is playing against their revenue and their net income and decide if you want to make some trading decisions based on all of that. All right, now we're going to get into the good stuff, the market commentary. So everything that happened over this past week, I'm going to fill you in on all of that news so you can go into next week just a little bit more knowledgeable about what's happening in the markets. This past week, we saw the Nasdaq up 2%, we saw the S&P 500 up 1.6%, and we saw the Dow up 1%, and equal weight indexes all lagged. We saw tech do a lot of the heavy lifting this week as semis popped, but we did see Oracle somewhat seal the show, of course, posting something like a 20 or 40% gain over the past week, maybe even more than that. Just incredible. I'm sad that I missed out on that trade. I should have thought to add Oracle to the AI secondhand effects portfolio. Sadly, I missed that one. I'm not super distraught about it. I think it's going to be fine, but no surprise here that Oracle's potentially going to have a ton more revenue because of all the data center action that they are going to be handling. It seems like markets are still expecting a 25 basis point Fed cut this month and probably another by year end, but 25 looks like what's on the table right now. And of course, the tone for this past week was mega caps running heavy. Cyclicals and energy were both choppy, with oil hovering around $62 to $64. But the AI secondhand effects portfolio, which focuses heavily on energy, actually performed quite well. And while I'm reading this podcast, let me pull up the autopilot. Let's see what the returns were on autopilot for this past week. The AI secondhand effects portfolio this past week was up 4%. So even while oil or energy in general was lagging, our AI secondhand effects portfolio just had incredible returns over the past week. And so that is definitely nothing at all to be upset about. So actually really happy with that performance. Synopsys just completed its purchase of Indices, ANSYS. I'm not even sure what that company is or what it does. But their fiscal year 2025 revenue is guided to be $7.03 to $7.06 billion, and it is steering chip design IP towards AI, autos, and high-speed connectivity. So a lot of good stuff happening there. If they can break into the, I guess you call it like self-driving market, the auto market, they are going to find a place where dollars is going to meet big demand. And they're going to do very well, very, very well if they get into that space. In the other world of tech news, TSM is performing incredibly well with August sales up 34% year over year and is just growing sequentially. This is clear evidence that the AI silicon demand is still outrunning capacity. Companies like Texas Instruments and ASE also were jumping on big demand, and Texas Instruments is seeing data center revenue potentially jumping over 50% into 2025 as AI buildouts are needing so much power. Again, this is great news for the AI secondhand effects portfolio, which is big bets on all of the companies providing this power. I think we're going to see continuous improvement in that portfolio in those companies over time. Of course, I'm always watching a lot of these power companies, a lot of these nuclear companies, a lot of these SMR companies to see if there's anywhere where we can find kind of market undervaluation. But everything right now seems to be overbought, in my opinion. But if things start to dip, we are definitely going to be making some large buys in that portfolio. In the world of EVs and autos, there is so much happening. Ford is recalling tons and tons of vehicles because of rear camera issues. Xpeng is unveiling the next P7 in Europe. Again, these Chinese companies are building super cheap cars. How that's going to pan out in the long run is yet to be seen. They just recalled 47,490 sedans in China for steering gear replacements. And, you know, you get what you pay for, is all I'm going to say about that. I mean, if you're buying a super cheap car, it's not going to be built the best. Rivian is recalling 24,000 vehicles, and Tesla just lost senior engineers as leadership churn in that company continues. And I think that's what happens when you get a leader who starts to focus on many different things and isn't there to lead specific teams in the right direction. When you're working on autonomous robots and self-driving and trying to run Twitter or X, I mean, you just can't keep people around because they don't see the vision as much if you're not there leading the charge. Again, there's a bunch of energy news. I'll read quickly about Baker Hughes, which is a company we added to the portfolio kind of later in 2025. The ticker is BKR. Again, this is a company in the AI secondhand effects portfolio. It won liquefaction equipment for Rio Grande LNG Train 4. Now, if you're wondering what that means, basically they're going to be taking over a big chunk of the LNG market. And I think that's going to be very, very important. Now, of course, I think SMRs are going to be powering data centers in the future. But for the time being, it looks like something called cogeneration could be powering a lot of these data centers. I'll have to write about that at some point. But basically, LNG is going to be a very, very powerful resource for a lot of these companies when it comes to providing power to these data centers. And so Baker Hughes, winning that equipment is going to be a big deal for them, allow them to expand and just grow massively. So I'm excited to see that. United Health, of course, we've seen that go on a crazy run post Buffett buy. I wrote about that not too terrible long ago and said that you guys needed to be getting into that company. So now we're looking at, EPS for 2025 greater than $16 and $445 billion in revenue to $448 billion in revenue. So just doing incredibly well there. And that should come as no surprise that that company was just violently oversold. Now there's a bunch more stuff in here, a bunch of news about companies, insider trading, of course, some of the interesting trade ideas. I didn't have anything too violently important from last week, although paying subscribers did get some articles on the IPOs, and some of those IPOs did great, some did poorly. The only thing that was rough there is that we didn't get a lot of allocations, and so it was hard to make any meaningful profits. In percentage terms, the profits were great, but in terms of making a meaningful profit, there wasn't too much to be said there. We're going to be looking at StubHub for next week and Pattern IPO as well, just to see what's going to happen there. And again, paying subscribers, you'll be getting access to a lot of those buys. Again, as always, I'm looking for another Berkshire buy to write about. If you have any recommendations of companies that you think could be valuable, fire me an email, reply to this email, send me a message, let me know, and I'll take a peek at those. Just quickly, I'll touch on the portfolio performance that we've had so far since the portfolios have been on autopilot, which is about a month ago. Our tech-focused growth portfolio is up 13.88%. Our AI secondhand effects portfolio is up 12.28%. And our flagship fund is up 3.79%. Again, the returns that we've had on these portfolios are actually better than what you're seeing on autopilot because they've existed long before we moved everything to autopilot. But even with that being said, even just over the past month, we've already begun to outperform the S&P 500 for the year. So very happy with that performance. As always, paying subscribers, you can scroll down and see all the holdings in the flagship fund and get some commentary on all of those stocks. Same thing with the AI secondhand effects and the tech-focused growth portfolio. I think that's all that I have for you this week. You can go and read through the rest of it if you're a paying subscriber. If you're a free subscriber, consider joining our paid program. And guys, I will see you all next weekend and hopefully sometime in the middle of this week with some updates on trades. We'll talk soon. Bye.